Hello everyone, welcome to Sesky Trades. I'm Sesky, and yeah, today we're going to be talking about market structure. For those of you that are new to trading, this is a basic thing you need to learn. It's a fundamental that you need to understand. You need to learn about market structure. It is a very important part of trading. If you don't understand structure, then everything else will be wrong. All right, so I welcome you all once again, and mind you, this is purely educational. It's purely educational. I'm not giving you signals. I'm not telling you to go and buy or sell anything. It's purely educational. And also, I'll introduce you to the platform I currently use, which I feel everyone should get into. All right. So, like I said, welcome everyone. I welcome everyone. And so, yeah, by the way, if you're still new to trading and you want to get into trading and you're still thinking about the platforms to use, put a link I'll pin a link to the comment section, or I'll pin a link up there to a trading platform. I think everyone should perks, a lot of bonuses that they're giving currently. All right, so that being said, I'll begin the classes shortly. All right, so let's go. All right, like I said, we're going to be talking strictly about market structure today, and this is the first, our first live stream, and we'll be doing a series of live streams every day for at least 2 to 3 hours, teaching you the basic concepts of technical analysis, different ways, and also we're doing live trading. All right. So, but today we're starting with an educational content that I feel everyone should know, or everyone that I feel is very foundational, and everyone should um, try and key into and try and understand market structure because market structure is very important. So advice, take your time, relax, listen. All right. There's no rush in this. We'll take our time. We'll learn this thing properly. We'll learn them properly. And just know that trading isn't about speed. It's about understanding. So you need to understand before you go into your trades. All right. So as you can see from here, we're talking about market structure. Market structure. You can see from the topic. Let me highlight it so that we can begin. So yeah, market structure. From topic you can see there the architect's blueprints for trading. So I guess everybody understands it. I had to, create or uh, create a slide for this specifically for this training. I'll be doing that for each training class that I come here, so that you guys get to visually see and understand it in a better way. So this slide was specifically created for this training session. Then after this training session, basically we'll get to use the charts. We'll get to use TradingView. We'll go to the charts on TradingView and also the platform I actually use, which is LBank. All right. So let me do something quickly before I start the masterclass. All right. So like I said, welcome to you all. Mm-mm-mm. I welcome you all. My name is Sesky. Just a minute, trying to make things work out perfectly so that you guys understand. Let me just set up. Let me see how I can put the link. I'm coming. Just a minute, guys. I'm trying to. So, guys, sorry about that little delay. All right, we're back. So, we're talking about market structure today. Okay. So when we're talking about market structure, as you can see from my slide here, you can see every chart is a blueprint with two layers. You understand? Every chart is a blueprint with two layers. We have the big picture and we have the details, which is you can call it macro structure and microstructure. Macro structure, microstructure. What everyone sees basically most of the time is the macro structure, which is the common one. But every trader has to know the difference. You understand? You have the big picture and the details, the macro structure and the microstructure. So what is the macro structure? The macro structure or the big picture actually actually the market structure itself. It's basically the skeleton of the market or the price of the market. So this is the skeleton that gives the shape, as you can see from my right up here. This is the skeleton that gives the shape to the market. It shows the major highs and the major lows, the overall trend direction, and answers the question where we are in the market. What does this mean? Once you, for instance, you go on TradingView or any charts from any of the exchanges, you go on TradingView. What you can see is the first thing you see lots of candles, and you see either some people, most people don't really understand it. You understand? Sometimes it's confusing when you guys first get to see it. But learning this market structure and knowing this blueprint will let you understand why the market is the way it is and you understand the movement and the structure of the market. It basically shows you where we are at the moment. Okay, so from this diagram here, you can see. Okay, let me just go on TradingView so that I explain better to you. Or but before I go to TradingView, let me explain what the microstructure is. You understand? So now I've told you about the big picture and the macro structure, which is the market structure itself, the skeleton of the market. So the first thing you see when you get to the market, basically, is when you zoom out. You understand? When you zoom out, when you enter the market and you zoom out, um, that is the macro structure or the market structure or the basically the big picture. All right. So when you zoom out, now the details, the microstructure is basically price action. It's just price action. So these are the small movements inside each swing. You understand? What do they mean by swing? This is a swing. I don't know if you can see my arrow. This is a swing going up. This is a swing. This is a swing. This is a swing. All right, so price action, these are small movements inside each swing. The individual candles, excuse me, the macro patterns. It answers the question, what is happening right now? You understand? Now, the the market structure, which is basically what we are focusing on today, that's the big picture. When you zoom out, the macro structure, the skeleton of the market, and it's basically used for establishing direction on buyers. What we mean is that we want to know, is the market trending? You understand? Is it a trending market or is it a ranging market? Do you get? Is it a trending market or is it a ranging market? Is it an uptrend, a downtrend, or a sideways market? So it's basically used for that to know the direction of buyer. Then while the price action or the microstructure is used to time entries and exits with precision in the market. So yeah, I'll go on trading view now so I can just basically show you what it is. You understand? So let's do that quickly. Now you can see, I'm sure everyone can see this. What's the first thing you see when you come here, I'm sure it's to a lot of newbies. It'll be, what's this? This is jargons basically. What's this person showing me? What am I looking at? You understand? You get confused. You get confused. But from this, if you get to understand market structure, you basically know how to read this. And this is what most of the markets look like. So for instance, now see how you're going, it goes up, and it's not just, it doesn't just go one way. You can see it makes and all that. So it goes up, pulls back, goes up, pulls back, goes up, pulls back, pulls back. I'll teach you all that. I'll teach you guys all that. Then from here it starts going down. So I can see this way, was an uptrend. Around here it was ranging. Let me mark it for you guys to see. What's going on here? I don't know why this is acting up. I'm gonna get it shortly. Aha. So here we go. You can notice this place where this triangle is. You can say this was a ranging. This is a short range though, but this is a sideways or a ranging market. All right. Here, down here, let me use an arrow so that you guys can see it. And or let me just use, okay, yeah, let's just use the arrow. Down here like this was a downtrend. Up here, let's do this again. This is an uptrend. So as we go along, you will get to understand it better. But from this little bit now, you can see what I'm talking about. So this basically shows the skeleton of a market when you zoom out. Basically, it's used to know it. Like I said, it's used to time to know the outlook of the market. It's used for directional bias to know where the market is at the moment, to know where we are at the moment. All right. So it's to know if we are in a trending market, either an uptrend, downtrend, and a ranging market. So yeah, that's that for now. Let's get back to let's get back to our class. So, all right, so back to this. So I'm guessing we understand all that. I'll explain I'll explain what this is. You can see I marked a high, a high, a high. I marked a low, and this is the magnifying glass. That's this particular spot here. The this place here. Magnifying glass is basically showing you the micro. That's the price action. Basically, where we get to check the candles, the wicks, and the micro patterns in the market. All right. So this is this is where we go for the details. This is where we time our entries. That is what the magnifying glass shows here. Therefore, here is just the skeleton. You can see what it looks like. The skeleton. The skeleton. All right. So the candles, the details. So from the magnifying glass, you can see what it shows. It now shows us. You can see the green candles. We have the green candles. See, the bullish candles, and bearish candles. Yeah, here with the green ones are the bullish candles, and the red candles are the bearish candles. And you can see. So that is what we got from zooming in. You understand the price action, the details, trying to get in the details. All right. So I'm guessing we understand that. Okay. I can see you understand that. So go to the next thing. Identifying swing points and the building blocks, basically. All right. So just a moment, please. Just, just a moment. Hold on. Ah, maybe it's not right. Yeah. Hello guys, I'm back. Sorry about that. Little domestic issue. Hazard. I really apologize. Okay, so let's get back to it. Let's get back to it. All right. All right. So identifying the building blocks of the market structure. So the swing points. The swing points are the major turning points that define the macro skeleton of the chart. Like I said, we are focusing majorly on the macro skeleton. That's the market structure itself, the macro skeleton of the chart. So defining swing high. You understand? A swing high, as you can see, recently, a swing high is a peak where the price turns downwards. You understand? A swing high is a peak where the price turns downwards. Mhm. Then it basically marks potential resistance zones and reversal zones. You understand? So let me show you a swing high. Looking at this high, you can see this is a swing high up here, where the H, this H, where you can see this H, that is the swing high. You understand? Another swing high, another swing high, another swing high, another swing high. You understand? Like swing high is a peak where the price turns downwards. You understand? It basically marks potential reversal zone. So as you get along, you understand what reversal means and why swing highs are very, very important because there are also minor ones. All right, so the swing high is the peak where price turned downward. It basically marks potential resistance and reversal zones, like I said. And the definition of swing low, swing low is a valley where the price turns back upwards. So if, if you look at this, this is the swing low, this is the swing low, this is the swing low, the swing low, and that. So if you notice, it happens when they understand, or when there's a bearish candle, when it's like when there is a bearish trend. So The low that you see there, you understand, is it could be a potential, the lowest low you can see there, it could be a potential support or support zone. All right. So you can see this is a low, this is a low, this is a low, this is a low. All right. So that about swing highs and swing lows. Um, I think I should show you guys on the chart too, so you can understand this better. So let's get back to, for each section I go through, I'll definitely get back to TradingView and show you guys so that you understand it better. But this graphic here, this diagram here already pictures it properly for you on what you basically see. But you know, this is a live session, so I want everything to be real so that you can understand what we're doing here. All right. So before I go to TradingView, let me repeat again. The swing points are major turning points that define the macro skeleton of a chart. All right. It's a peak where the price turn it's always is a peak. That's the swing high. Swing high is a peak where the price turns down potential resistance zone and reversal zones up there. So it's a peak. You understand? I know some of you don't know what support and resistance is. Don't worry, I'll get to that gradually. We're going to teach that. We're going to teach that. All right. So on the swing low is a valley. You know what a valley is now? It's a valley where the price turns and goes back upwards. That's a swing low. The swing low is a valley where the price turns and goes back upwards. It's always characterized by bearish candles or bearish trend, and as they're coming down, then it turns. It wants to reverse. You know, the support zone, it hits the support zone. There's always a potential support zone. All right. So one major rule that you guys should take on, see a blueprint rule. Start by marking the major swings to see the main structure. Then you add the minor swings, small turns inside the moves only when zooming for entries. Do you understand that? So once you get open your chart, the first thing you have to do is start marking the major swings. Mark the major swings. You understand? So mark the major swings to see the main structure of the chart. You understand? So once you mark your major swings and you know your major swings, then you can now decide, okay, and when you want to zoom in for entries, then you can now check the small moves, the minor ones inside, the minor swings inside. You understand? So yeah, so let's go do that on trading chart once more. On trading view, I mean. Let's go do that on trading view once more. All right, so let me get this, let me get rid of these ones that I did before. By the way, this is the recent Bitcoin chart and what it's showing us. All right. So let's just basically use this minor uptrend that you can see. Then from here, this is a swing high. Let me, what do I use to mark it for you guys so you can see? Oh, let me do this. Let me do this first before I come to the chart. So let me draw this for you guys. Mm-mm. Sorry, just a moment. All right, so from this diagram you can see, just follow my cursor. All right, so you can see the, this is a high. If I should just put a text there for you so you guys can understand it. It's just like the way it was on the diagram that we just showed you. Okay, let's do that again. Sorry about that. Okay, let's stop here this time. All right, so this is the swing high, this is the swing high, and this is another high. Now, in between these highs, there will be, or there are smaller swings in between when you zoom in, like the timing for entry. So I'll get to that part later. But this is a high, this is a high, this is a high. All right, so let me show you this on a proper chart itself. I'm looking for, I've gotten a good one to show you guys. Okay, just a moment. All right, so what I'm looking for, I can't find it. I don't know where it went to. So I'll just use this to. All right, this is a swing high. Let me mark it for you. That's a swing high. This is another swing high. This is another swing high. This is a swing high. They're basically the highest points in major trending moves, you understand? So like the swing high is the highest point in every trend, you understand? So this was the swing. There is my arrow. You can notice it all started from here. There was a reversal here, then boom, it broke. You get to learn that it broke a structure here, broke a structure. You understand? It broke a structure here, the previous low. You understand? So it boom moved and it got to this high. This is a major high. You can see there are minor highs in between. There are minor highs, there are minor highs, there are minor highs, there are minor highs. Then it got to this was the highest point. Then it shot up again to this. You can see another high went up again down here. I'll be up here. All right, and so on and so forth. This is how to mark highs in charts. All right, so just look for the major ones, the major swing points. You understand? The major swing points, and you work with that. So and charts, textbook, seeing it on textbook is actually very easy, but when it comes to the real chart, it's always more difficult to mark out the major highs and major lows. But looking at it, you can always, if you understand the basic fundamentals, you get to do it better. You get to do it better, okay? So let me get rid of this because we're going to still use this chart later. All right, so let me use one to look for low. All right, let's use this part here where it started a downtrend, a downtrend. You can see the reversal here. It hits a resistance zone and it started coming down and broke this structure. And we have a major low. You understand? See this? This is a low. This is a low. This is a major low. This is another major low. You understand? So That is just basically how to read the market. You look for the most significant ones that you can see. Though sometimes it's subjective, many people see different things, but this is the most objective it can be. You look for the most significant ones that work. All right. This is a low, this is a low, this is a major low. You understand? The ones in between are minor ones. You understand? All right. So let's get back to our class. Okay, so I hope you guys understand what we're doing from here. Okay, hope you understanding this. We move to the next thing. Now we're going to be talking about the heartbeats of the market. You understand the heartbeat of the market. All right. So before we get into that, just I'm sure you can see my screen. Calling. All right. So let's talk about the market heartbeats. All right. The impulse and the pullback pattern. Basically, they're the fundamental heartbeat of every trend. They're the fundamental heartbeat of every trend. Okay, they're the fundamental heartbeat of every trend. The core concept is that market moves in waves. That's basically the core concept. Market moves in waves. Market moves in waves. You understand? That's the core concept. All right. Every trending market follows the same rhythm. Strong moves in the trend direction followed by weaker pulses against it. Every trending market follows the same rhythm. Strong moves in the trend direction followed by weaker pulses against it. Understand? So what's an impulsive move? What's an impulsive move? So what an impulsive move is a strong, fast move in the direction of the main trend. You understand? So an impulsive move, like we have an uptrend or a downtrend. You understand? An impulsive move is a strong, fast move in the direction of that particular trend. You understand? So for most trends, you see bigger candles. That's for an impulsive move. You see bigger candles of the same color. You understand? You see bigger candles, and they must be of the same color, and they have clear momentum. You understand? You see more of it in an impulsive move. Now, this from this diagram here, you can see what an impulsive move is here. This is an impulsive move. You can see big green candles, candles, engulfing candles, green candles, green candles, green candles. You understand? So impulsive move. That's the characteristics of an impulsive. Once you understand what an impulsive move is, this is how you know an impulsive move. Boom. That's an impulsive move. This one is a swing. You understand? Then the pullback. Market is always going to be a correction. For every market, there will always be corrections. All right, so what is a pullback? A pullback is a small counter trend move against the main trend. You can see that here. The pullback is a small counter trend move against the main trend. That is a pullback. Okay. So as I was saying, the pullback is a small counter trend move against the main trend. What are the characteristics of pullback? You see mixed overlapping candles, smaller bodies, more wicks, you understand? So in most pullbacks, you see mixed candles. Sometimes you see a green candle, you see a red candle, you see a green candle, you see a red candle, and you see candles with a lot of wicks in between them. So that is the pullback. You understand? It's a correction. Basically, every market must correct, you understand? Every trending market must correct. There must be a correction. So you see it green, red, green, red, green, red, green, red, green, red, green. Understand? So you should understand all this, but a pullback is a small counter trend move against the main trend. You understand? So we go back to TradingView and I show you what this is, and I show you what this actually means. Uh, all right, we're back to TradingView. Excuse me. I hope you guys are following. I hope everyone is following and everyone is understanding this, because we need to understand market structure before we start going into main trades. All right. All right. So before I do the trading view, I still like to sh draw the diagram so that you guys will understand. So from this, you get to see what I'm saying now. This is an impulsive move. Now we have a pullback. You can see another impulsive move. We make sure that it goes higher than the previous high. You understand? Another impulsive pullback. You understand? And you notice the pullbacks are always shorter. You understand? The corrections are always shorter. The impulsive move, you see a very long, it goes boom and a pullback, and so on and so on. If there was extra space here, I would do that. All right. So this is the impulsive move. This right here is the impulsive move. See the impulsive move here, impulsive move. Now this is the pullback. This is the pullback. Yeah, this is the pullback. All right. So we have different types of pullback. We have the simple pullback and the zigzag pullback. The simple pullback is basically one clean move against the trend, one clean counter move against the trend. Understand? It's easy to basically identify and give straightforward entries. Then there are also the zigzag ones. Those ones they require patience. Those ones are quite hard to deduce, and it requires patience and better risk to reward and risk reward. Understand? So if you see a clean pullback, lucky you in a trade. Figure this out on this. I'll see you like I said, I'll still use this Bitcoin trade that we're using here. Okay, so there's always going to be a pullback. All right, so this uptrend, see this one major uptrend here. There's my arrow tool. All right, so it started from the reversal, started going up. See, started going up. Then there was a pullback. Let me use this other one. Sorry, guys. Let me use this other one. All right, it started here. Then we saw a pullback. Went on, pullback. Went on, another pullback. Went on, pullback. Again, pullback. Again. And a little pullback down here. Again, pullback. Let's stop it. So basically, you get the big picture, the picture of what I'm saying. So this is an impulsive move. See the impulsive move. It's always let me see. Let me expand it. No, so you guys can understand what I'm saying. All right, better. All right. So now, if you notice, there are more green counters in the impulsive move when you know. Yeah, some red candles might show, but very tiny little red candles. All right. But when you look at the pullback, see this pullback, it was all red candles. You understand? It's usually mixed, but sometimes more red candles. It's always more red candles, basically. Then see the impulsive move went on. See green, 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 green. Went on. Then see the pullback. It's always a red candle. Like that, like that, like that, like that. Up, down, up, down. Now see, this is even clearer. See the big green candles, the big green candles, the big green candles, and so on and so. So this is how you study the fundamental habit of the market. Basically, the impulse and the pullback. Every every market must have that. It's characterized by that. All right. So showing you that here. Yeah, and let's go back to our class. Is that you should master every part this pattern. Every every trending market always has an impulsive move and a pullback. Always master that pattern before anything else. You understand? Master it before anything else. All right. All right. So, all right. The next thing we are going to talk about is the market state, this different market states that we have. All right. So usually we have, excuse me. Oh, had a long day today. I just had to be here. I just had to make it. All right, but I hope you guys are understanding everything that is I'm teaching and what I'm talking about. All right. So, uh, All right, so let's go. There are three states of the market. We have the uptrend, we have the downtrend, and we have the ranging market. All right. There's also one that is the transition market. Basically, that one I advise everyone to avoid that one. It's not common. It's there. You see it, but most traders don't usually really take note, but it's always there. All right. So, what's an uptrend? There are, like I said, there are three states of the market, majorly, majorly. But we have the trending market, and we have the uptrend, we have the downtrend, and the ranging market. Then there's also a transition market, of which I'll explain what that is to you shortly after I explain what the other ones are. So, what's the option? The option consists of a series of higher highs and higher lows. You understand? A series of higher highs and higher lows. Series of higher highs and higher lows. So, basically, people look for like they say, the trend is your friend. Don't always trade against the trend, or don't always go against the trend. You understand? The trend is your friend. If it's an uptrend, look for buy opportunities. If it's a downtrend, look for sell opportunities. The trend is basically your friend. Don't you ever try going against the trend, all right? So that's just the way it works. That's just the way, that is how you become more profitable. The trend is your friend. All right. So, like I said, an option consists of a series of higher highs and higher lows. Each swing peak high is always higher than the previous high, and each swing peak low is always higher than the previous low in an uptrend. Don't worry, I'm gonna show you your trading views shortly. This is a high. This is a high. If you notice, the next high is higher than its high, high, and so on. So if you notice, this high is higher than this. That's the characteristics of an uptrend. It consists of higher highs and higher lows. So the next, just what it means is that this each swing peak, and this is a swing. I've told you before. This is a swing. This into that well. This is a swing. This is a swing. This is a swing. So each swing peak high, this is the peak high, is higher than the previous peak high, swing peak high. So this high now is not higher than this high. You understand? And each swing peak low, L, is higher than the next low. You understand? So high, high, low, sorry. This high is higher than this high, and this low is higher than this low. That's the characteristics of an uptrend. So like I said, the trading strategy is basically looking for buying opportunities here. All right. Now the downtrend. Now the next one is the downtrend. This one is basically consists of lower highs and lower lows. It's just the opposite of the uptrend. All right. So it consists of lower highs and lower lows. Each swing peak low is lower than the last low. That's just it. Each swing peak low is lower than the last one, and each swing peak high is lower than the previous high. You can see this high is lower than this high, and this is a low. This low is lower than this low. That's just basically. So, like I said, the trend with your friend, never trade against the trend. So the strategy to look for is just look for selling opportunities here. Look for short entries, basically. Then a ranging market basically it doesn't have higher highs or higher lows. It consists of equal highs and equal lows. You understand? Basically, that is what a ranging market is. They basically stay at the same level. Like I said equal highs and equal lows. Well, you can the market is not that perfect. You understand? It wouldn't be exactly equal. So just around equal. It's not definite higher high or definite higher low, lower high or definite lower low. You understand? There's no definite lower high or lower low. All right, so yeah, basically the major strategy that people trade for here is just me for one is waiting for a breakout. You wait for a breakout. All right, so one critical rule: different market states require different strategies. Never force a trend following strategy in a range. You understand? Do you guys get this? Different market states require different strategies. Never force a trend following strategy in a range or a range strategy in a trend. Basically, this is a ranging market. These two are trending markets. You understand? If you have a strategy that works for a trending market, for an uptrend market or a downtrend market, it will never work for a ranging market. You understand? So never force that. Never force a trend following strategy in a range or a range strategy in a trend. Also note the transition and here, like I said, the transition state is a messy and choppy market that is best avoided. A transition a transition market is basically how will I explain this to you for you to understand now. It doesn't have a definite trend and it doesn't stick to a definite range in market. It just transitions, like I said, like the word goes. It's a market that transitions between a trending market and a raging market. So it's very, very confusing and it's best to avoid such markets. You understand? It's best to not trend in such markets. Like I said, the best markets to trade is either the uptrend market, downtrend market, or a ranging market that can show is a ranging market. You look for breakouts there. You understand? Preferably, I go for the uptrend or the downtrend and reversal. You understand? So transition market is switches between a trending market and a raging market. It's not steady, so it's best to avoid it. So when you zoom out, you see that kind of market, you understand what we're talking about. All right, so uh, I think we should get to trading view once more so I can show you that. All right, so we're talking about the uptrend, higher highs, higher lows. Uh, so from this previous markup I did, you can see this is a high, this is a higher high, this is another higher high. If you notice, like I said, the uptrend is always it consists of higher highs and higher lows. The next swing high is always higher than the previous swing high. Understand? So this high is higher than this high. 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 And same with the lows. You can see the lows that we get from the pullbacks. This low, this low is higher than this low. This low is higher than this low. This low here, this one here is higher than this one, is higher than this one, and so on and so forth. So that is how to understand the trending market. So from here, this is an uptrend. It consists of higher highs and higher lows. Now let's look for a downtrend on this chart. Yeah, the downtrend. This was a mini downtrend, though it's now showing that it's ranging and there might be a reversal somewhere. But let's just watch and see. So yeah, this is a downtrend. Like I said, the downtrend is lower highs and lower lows. So this is a so it's sloping down. Let me bring that tool out. All right, so this little downtrend happening here, you can see it consists of a lower highs. See this high here, this low is lower than the previous low, and this high is lower than the previous high. I mean, this high, this next high is lower than the previous swing high. This next high is lower than the previous swing high. So this is what a downtrend is. And this low is lower than the previous. Oh, I even forgot to look at. I didn't see. Uh, let me see. Aha, corrected. This low, this low is lower than this one. This one is lower than this one. You get so that's what the characteristics of a downtrend is. Now let's see the ranging market. See, you can see this part here, this whole region. Let me use the rectangle tool. See this whole region here is a ranging market. It's no definite highs or lows. They're almost at equal levels. You can see, you can see, you can see, you can see. This is a ranging market. So we look out for breakouts here. In downtrends, we look for sell opportunities here. Look for selling on reversals. We wait for it to come and hit an order block. I'll teach you guys smart money concepts soon. So yeah, so this is a ranging market. You can see almost equal. All right, I'm sure we get that. So let's go back to our class. Oh, excuse me. Is the class boring? I should have brought in music. I think I'll bring in music. Maybe I should even play some. Because when we start doing the live trades and we're waiting for our trades to well, let's just finish the class first. All right, so yeah, I'm sure everyone understands that. So let's go to the next thing. All right. Oh, excuse me, guys. All right, so now let's go to this. Reading the blueprints objectively, break of structure, and change of character. That's what basically BOS and COH means. All right. So these are more smart money concepts, but I can just briefly tell you this because it has to do with market structure and reading the markets. Okay. So like it's saying here, these two signals provide a mechanical way to interpret trend health and potential changes in the market. Excuse me. Signal one, break of structure. What is break of structure? Break of structure is when the price breaks the previous swing points in the trend's direction. That is what a break of structure is. BOS. Most people talk about it, especially people that do smart money, that use the smart money concept to trade, or their smart money strategies to trade. Break of structure is when the price breaks the previous points in the trend's direction. All right. What does this signal? It signals trend continuation. In bold green, it confirms the current trend is still intact. So, looking at this skeleton now, see, this is an uptrend. You understand? This is a major uptrend. All right. So, you see where these arrows are? These dotted lines. These dotted lines. After the pullback, there's always going to be a pullback. Okay. This is our impulsive move. Then the slight pullback to a higher low. So once it starts going back and breaks the point at which it breaks the previous high, that is where we mark as a break of structure. As you can see with the dotted line, this is the BOS, break of structure. So when you hear people talking about BOS break of structure, this is what it is basically. So this dotted line has been broken and is the BOS. Up next, you can see it goes on, it back its correction, then it breaks structure again. Once this happens constantly in an uptrend, it means there's a trend continuation. It means there is a trend continuation. Like for this now, this is a bullish trend continuation. You understand? This is a bullish trend continuation. Green, you see green candles here. So it always breaks, like it says, the price breaks the previous swing points in the trend's direction. This is a break of structure. This is a break of structure. Break of structure. Break of structure. Break of structure. Like as you can see the swing points here: higher high, higher high, higher high, higher high, higher high. Then higher low, higher low, higher low, higher low. It's the you already understand that part. So this point is a break of structure. This point is a break of structure. This point is a break of structure. Here too, break of structure. All right. So this the signal two now, what we know as change of character, because as you're doing the market structure, when you see the change of character, you should know it helps. People through this a lot. You understand? So what it is? It's the first meaningful break against the established trend. That is what the CHCOH, basically the CHC or CHOCH, change of character. So whenever you see this, you should know what it means. CH. The people there are some names people call it. There are different names. You can see it: market structure, SMS. Is it the SMS? Change in market structure, or BBM. There's this other what they call it. There's this other name they call it. Not market structure shift. Market structure shift is another terminology, and we'll probably get there when we start doing uh, SMC concepts, the smart money concept. All right, so I don't know, it just flew over my head. When I remember it, I'm gonna tell you guys. So, like I said, it's the first meaningful break against the established trend, e.g., breaking the last swing low in an uptrend. What it signals is an early warning. Like I said, it's not a confirmation, no. It's not a confirmation, it's a warning that in bold red that indicates the trend may be shifting or entering a range. It may be shifting, there may be a reversal at that point or entering a range. Now let's use this as an example. This is our skeleton diagram here as an example. All right, so you can notice we had an uptrend here. We had break of structure, break of structure, break of structure, break of structure, and so on. So once we got here, it came down gradually and broke the previous higher low, the previous low in the opposite direction. Instead of going up to break the high to continue the uptrend, this high now came down to break this low. This is the point at which it breaks this low, that previous higher low. The point at which it breaks this significant higher low is the change of character. Oh yes, I think I remember what they call it now, breaking market structure. That's what we call this. Yeah, breaking market structure. There's so many conflicting names. You can even decide to name something else, but this is the objective name I've seen people use: change of character and BOS. All right, so I prefer you guys to use this. So now, excuse me. So as I was saying, once it breaks the previous higher low against the trend, against the previous trend, you understand? It indicates that maybe this market wants to start going on a downtrend or it wants to range. So it depends. All right, depends. Then I'll show you guys something. I'll show you guys something. So, but what you should know, break of structure. When you see a break of structure, this break of structure, it means continuation. Stay with the trend. Once you see a series, it's early warning. Be cautious. The trend might be shifting. That's what you should take take note of. All right. So let's go to TradingView. Let's go on TradingView. All right. I always like drawing diagrams myself so that you guys can understand. Let me. Hold on, guys. I need to play some background music so that you guys can, you know, just a moment. Coming, guys, just a moment. I guess I'll do this another day. So let's get back to the class. So where were we? TradingView. I'll probably set that up so that at least we can have some background music, we having fun and entertaining ourselves. All right, so we're talking about break of structure, break of structure. Okay, so now let me draw a diagram. Let's do it from the beginning so that you guys can understand again. I love this too. Makes things easier. Swing, pull back, swing, pull back, swing, pull back, swing, pull back. All right. So let's mark out our break of structure. Oh, I probably should make this line thicker. Yeah, not too thick. Yeah, this is better. This is our break of structure. BOS. See another break of structure here. Oh, another one here. Now swing high. This is where our storm starts reversing, and boom, we have our COCH here. COCH, CHO, I mean, BOS. I should change the colors. The BOS should remain blue. Let's change the color of COCH, red. No, 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 not you. Yeah, you. Alright, so let's go on. Then here now we have break of structure. Hmm, come here. Break of structure. BOS. All right, so from this diagram, you can see what we have here. So impulsive move, a pullback, then we had a break of structure here, we had another break of structure here, we had another break of structure here. Then it went, came down, and broke this previous higher low in the opposite direction. Instead of breaking the higher high and going back up, no, we refused to do that and came down and broke this higher low. All right, and that is what we call change of character, CHOH. Then it continued downwards, breaking structures to the downside, breaking structures to the downside, breaking structures to the downside. And another reversal can happen here. All right, so you guys just get the big picture now. You can understand this. Let me show you on the trend, on the real chart, I mean.